Hey, what's going on? Just this week, I've talked to three people that have been in car accidents, and I didn't know this. They didn't have even minimum liability coverage. What's going on out there? I mean, I get it. When I was young, you tend to think, okay, I don't need this. What are the odds of this? Or this is too expensive, or maybe you're struggling. I get that. But you got to have at least the minimum auto insurance coverage in your state. In this video, I'm going to break down the minimum coverage. We're going to use the example of California when it's 15, 30, and 5. Want to know what that means? I got you. I'm going to share that with you coming up. Hey, what's going on? Dad2Excel here, and today we're covering minimum car insurance. What does it mean? Why you should have it? What it protects? What it covers? And the breakdown for you. Let's start with California. In California, you'll see numbers like 15, 30, and 5. The first two numbers cover bodily injury to others. Let's say you hit somebody, they get injured. The first number, the 15, is 15,000. It covers $15,000 for bodily injury to the other party that you hit. This is per person. So it's $15,000 maximum per person. The next number, the 30, is 30,000 per accident, meaning total. If it's two people that got hurt and their injuries total 30,000, between both of them, that's it. That's the coverage of that policy. No more of that. The third number is property damage. It's 5,000. Now here's the drawback with that. As you know out there, how many cars are worth, especially right now on the road, how many cars are worth $5,000? Most new cars are in the 25, 30,000 and up range. So $5,000 of coverage of property damage is very minimum, but I'll break that down. So right now, you know that 15, 30, and 5, 15 is for bodily injury per person, 30,000 is total per accident, and 5,000 is the property damage. Whether it's the other vehicle, you hit a pole, you hit something, it's just property damage for the other person. Now, here's the misconception. Everybody thinks that liability covers you. It doesn't. It only protects you from getting sued up to those amounts, those minimum amounts. But in reality, it's designed to cover the other party that you hit. Like I said, they get injured, you have liability insurance, that covers them, protects you from getting sued up to that amount, but it covers them. Now here's the drawback. If the injuries that they sustain are more than that, then you can still be liable. You're still liable. You can still be sued for the deficiency portion of that, the difference of that. Somebody's injuries were $50,000. Insurance pays out $15,000. They can still sue you for the rest. Now, are you suable? That's the next question in that sense. Do you own property? Do you have assets? Do you have, a lot of money in the bank? Do you have a good job? Can they garnish those things? All those things attorney will look into to try to find out if they can sue you, if you're suable. If you're just starting out, you're 21, 22 years old, most likely they know they can't garnish that, especially you can quit and that's it. They don't have anything. They just wasted more time on you on that. But if you have different sources of income, they can come after you. That's why it's in your best interest to have better coverage than that. So I just talked about the minimum liability coverage. That's the example for California. Each state has their own rules and their own minimum coverages. Now there's some states like Arizona who also require for you to have PIP, personal injury protection insurance, which covers you and your passengers against injuries in that sense. That's huge because, like California, you hit somebody, you have somebody as a passenger, they're not covered if you just have the minimum liability. There's some other coverages you can have, but just regular liability and they're in your car, it does not cover them. It covers the other person in the other car or the other people in the car, passengers, pedestrians, things like that, but it doesn't cover people in your car or yourself. In California, that's called, an extra coverage is called medical. It is assumed that you have health insurance, so therefore, just in case something happens to your passengers or yourself, you can actually go to the hospital and your health insurance should cover that. Now there's copays. So therefore, this is where medical coverage comes in handy to help you pay for that copay Or if you have it high enough in that sense in the state of California, it could cover some of those costs from injuries sustained. But that's an extra coverage that it's rarely offered, and it's just skimmed by if you're doing things on yourself by yourself online. It's really could be a little bit tricky, and most people forego it. They don't get it when it's really important. Another thing, uninsured motorists, if somebody hits you and they don't have insurance or they're underinsured, you could add that in California and other states as well. So that covers that portion if somebody hits you and their insurance is not sufficient, or if they don't have insurance. Is uninsured, underinsured in that sense. But the biggest thing is in California, you need to have liability insurance at the minimum. If you're leasing a car, if you're financing a vehicle, you have to have comp and collision, which that protects your vehicle and it protects the interests of the finance company so that in case something happens, you pay a deductible and they get the car fixed and you're back on the road, so therefore it's not a loss for them. There's one other thing, it's called gap insurance. I could go into that, some other stuff. Usually when you're financing a vehicle, they'll offer it to you. That's a good insurance option to get. But covering minimum insurance, please do yourself a favor. Get liability insurance. Even if you're driving, like we used to call it back in the day, a hoopty, even if you're having a little car that's beat up, have insurance just so that if you get pulled over, you don't get tickets, you don't get your car impounded, then you have to pay the impound fee, plus assessments, plus the fine. That adds up. And if God forbid you get in an accident and you're at fault and you don't have insurance, not only are you liable, can be sued, but your driver's license will be suspended. And it'll be suspended for a year, and it's a hassle and all that. Insurance rates will go up, so it could cost you some future jobs, and you don't want to be part of that. Pay the $79, $89, $99, whatever your rate will be for just liability insurance, and get that. Do yourself a favor. It's coming from Dad to Excel. I want to make sure that you're covered on that. When we're starting out, and I put myself in that boat again, we're more of a, man, I'm trying to save this. I don't have enough money for other things, and therefore we forego on the insurance, thinking, oh, we're just going to risk it. I don't think it could happen to me. I'm going to make sure I drive slower. I'm going to make sure I drive better. Hey, there's always unforeseen things that can happen. Don't put yourself in that position. Please, coming from Dad to Excel, get at least minimum insurance, minimum liability and coverage. Wherever you are, but especially in California, California has the toughest laws on that. Make sure you have that. If you have any question, put them down here at the comment section. I'll look them over and I'll try to answer them for you. And if I see enough, I'll go over and make other videos pertaining to that. So this has been Dad to Excel, and like always, I just gave you the best advice.